Hey guys, welcome back to another video. Wall Street has finally come into the play to help the price of natural gas. Views from Wall Street. US natural gas production cuts needed to salvage the 2023 prices. Now keep in mind, March is going to be a very chill month inside of US, so that will also have a positive impact on the price of natural gas. And on the other hand, the trends are starting to show very well, and if we do get some volume cuts, that is going to be one of the best things that can happen for people long on natural gas. Before we get into all of that, if you guys are here for the first time, you do want to stay up to date with everything to do with natural gas, I highly recommend you scroll down, tap the red subscribe button right there, slap a like on the video for the YouTube algorithm so more people can find out what is happening with natural gas and how everyone can make a lot of profit. Lower natural gas output volumes are needed to reverse the suddenly weak price in 2023, several analysts said in the new outlook. Yet they are also cautioned exploration and production firms against scaling back too aggressively because US export demand is poised to surge in the coming years. So obviously natural gas will be required more over the years, but you do need to understand, if they go too aggressive on pushing back the volumes to increase the price, that is going to be bad, because if the prices go way too high, it will just be really hard to get the export and demand working. We just need to find the middle zone to make sure that everything is done very fairly. And what is really interesting is, if you guys have not been paying attention to the weather, right now it seems that, let's just say, March is going to be a chilly condition inside of America, and you guys know use of natural gas will be increased, but if there is a small cutback on obviously the production, it is obviously going to help increase the price, as the demand is going to be high but the production will be still the same, if not a little bit lower. If you do decide to look at the trend, it has been forming from the past couple of days. From the 22nd of February, we have seen a very strong reversal and the downtrend has finally been broken. Right now we are sitting close to 2.8, and right now it seems like it is on a very strong resistance point. If you do not know what resistance I'm talking about, it was sitting close to the 26th of January. Now if this resistance is broken, there is not much holding it back from making it close to 3.2, because that is going to be the next strong resistance. Before that, it was just a fall down and it was just a bloodbath. I'm pretty sure everyone remembers how the end of January and start of February was a nightmare. Now you do need to understand also, in the RSI line, we are on the positive side as we are sitting close to the overbought zone, but you do need to understand that at the same time there is going to be some sort of production cut down, and if the production cut down happens while March is being chilly, you guys know the momentum sometimes natural gas gives in a singular day can make you a lot of money. But you do need to understand, if you are doing this on a leverage trade, be very careful, because it can have a swing trade, and if you do decide to go with the swing trade, you can end up losing a lot of money. So just be a very cautious trader if you are going to be doing a very strong leverage trade. Another thing which I want to show you guys is, if you look at this, natural gas futures extend winning streak, cash prices strengthen across the lower 48. So right now we did see a pull up as we got close to November, because November is the coldest month, and that is when, you know, the use of natural gas goes significantly higher. As we get close to January, we see a normal trend of it falling down because it gets a little bit hotter. But right now, this is the only time where everyone is expecting it to start coming back up due to the price falling so much lower than we were supposed to see it. Natural gas futures fallen higher for the 6th consecutive session on Wednesday, as traders focused on weakened production and forecasts for chilly March conditions. The April gas futures contract settled at 2.8, up 6.4 cents day by day. May rose to 8 cents and might push us all the way to $3. Don't expect it to push it too much, but I personally think that there is a very high chance that we might be able to see another $4 by the end of March. As the weather is starting to get colder and colder, global warming is having some sort of effect, you do need to understand that we need to be making sure that natural gas can just make it back to a point which is close to $4 and it can rest there by the end of the month. And also, if it does decide to rest there for a longer period of time, it can also rest there until the end of the year. But the important bit is we do need to make it back to the middle zone, which will be sitting somewhere close to $4. That is the estimated time. As you can see, that $4 should be the zone where it should have slowed down, but the production didn't slow down, so that's why when the demand dropped, a lot of people saw that the price just kept dropping, and I know a lot of you guys were very concerned as well. Another thing which is really interesting is if you do this, production on Wednesday fell below 98, down from recent highs around 100. You guys know the production was the big problem that was causing the natural gas price to drop. I mean, you know, it was very bad. But if, as a lot of people in our Wall Street said, if the production cuts down and just gets back to a point which is close to where it used to be, we will see a reversal go even higher. Right now, the production is sitting a little bit slower or dropping a little bit compared to where it was before, which is the good news. Another thing is looking at the price. Correction is in the offing. Considering the advanced print from the CME group for the natural gas futures market, open interest shrank for the third session in a row for Tuesday, now by around 2.3k contracts. In the same direction, volume resumed downtrend and dropped by nearly 55 contracts. So near term tops around $2.8. There is a strong resistance close to $2.8, but if we just stay above that zone, it's obviously going to turn into a support and we will be able to use it in the long-term future as well, and we will be able to climb up from there as well. This is looking really good because obviously the volume is still looking the same, but if we can just see a little bit of decline in the production, it will have a very positive impact, and I'm pretty sure whoever's holding it long will be very happy. Another thing is natural gas futures bulls aim to keep the rally going as March forecast trend colder. You do understand something going in your favor, which is March being colder, is obviously going to have a very positive impact when it comes to the bulls, because they would want to keep the rally going. They would want to hold the long even longer, hold the trade for until the end of March, as they are expecting the weather to be in their favor. Personally, I do think that the longs will be going for a longer period of time, and the strong resistance that might actually slow us down by the middle of March will be sitting close to 3.5. That is just my estimate. I'm just trying to tell you guys what I see right now, because everything is favoring in the price to be climbing, and personally I am really excited to see the near future of natural gas because I'm sitting in it quite strongly as well. I see a very good future. I don't know what you guys see, so let me know down in the comment section. I love reading the comments. I hope you guys did enjoy today's video. If you did, drop a like on it. If you're new to the channel, do want to stay up to date with everything, subscribe, and I'll see you very soon. I'm out. Peace.